Okie dokie. So today we're looking at Househack, which is an opportunity from Meet Kevin. And this is what he wants to do. We've got some documents here, so we're going to go through this. That's just my opinion. I'm not a financial advisor, but I like to think of things in a certain way using logic. And we're going to go through the deck first. So this is Househack, Meet Kevin's investment startup. And I'm going to go through it. Introducing a new company, real estate company, in the coming months where there will be an opportunity to wedge real estate through Househack. We can do it together at scale. Now accepting investors a 1-for-1 valuation. The deadline of the 30th of September for the highest benefits. It's actually the 2nd of October now, so I think you might have extended some of these. Anyway, opportunity residential real estate, world's largest asset class. Prices are falling now in a lot of places around the world, including America. Inviting accredited investors, which we'll talk about later, to join us in the future. We hope to accept non-accredited investors. So that's something to be aware of. Company will be valued at asset value raised, aka cash. That is, if we raise 100 million, the valuation will be 100 million. This is unusual. Most operating companies in real estate trade for at least 2.17 book. See INVH on Yahoo Finance. Checks 8th of, is that the 8th of September or the 9th of August? I always get confused with American dates. Anyway, if we traded at 2.17, they would actually be valued at 217 million. That means you're actually getting a wedge deal on your Househack investment. I've not heard that expression before, wedge deal, but it's valued on cash. Really, you should be, one way to think about investing is to invest based on expected return on investment or return on capital employed. That's where I look at things. That's one way to kind of identify an opportunity. However, I don't think there's much. This is like a pitch deck, really. So one form of pitch deck, so it's probably not going to have it. It's got some news here. Excuse me. San Francisco home prices falling 7%. Mortgage applications falling to a low based on interest rate rises. Why now? Mortgage rates are increasing fast. Non-cash buyers, every 1% increase in the mortgage rate decreases buying power by about 10%. This leads to an opportunity that is disproportionately benefits investors over the typical home buyer. A buyer with $2,000 a month mortgage budget can afford a 30-year fixed loan of $500K at 2.5% interest, but only at $313,000 loan at 16%. That's 37% less. Leads to incredible buying opportunity for investors well prepared with cash, like us, and that does make sense. I'm not going to read this word for word because there's a lot to get through. But basically, it's saying that the competition are slowing down, including big builders, Redfin, Zillow, Opendoor. Percentage of active listings with price drops are spiking. People are reducing prices essentially. Why us? After selling 150 million in real estate and transacting over 200 individual deals, many of which were with renovations and rentals often featuring our in-house construction team. I suppose every developer has a team of of people, a power team they use. That's not that special, but anyway, ready to scale their own formula. This same formula will address our short, medium, and long-term rentals in our uniform, which simplifies the design, ordering, and building processes with internally created standardized templates. I do like that idea of a mix between blended short, medium, and long-term rentals. I've been doing it myself in London. I do think it is an interesting model. If you can do it with cash, there's a lot more flexibility because there are mortgage determinants and sometimes limitations for what you can do. And if you can leverage this kind of system using cash, then there's a lot less restrictions. They've built some AI software to help identify deals fast. In the future, we may license this software as a software as a service model. I think that's a good idea. I do think it's only going to probably feed the top funnel of purchasing a house, i.e. identifying potential deals, which if you know what you're doing, if you're looking at an area and you're a professional investor, really shouldn't take more than kind of 10 to 20 minutes a day anyway. Maybe an hour a week. Maybe this software will do it even faster. Saving an hour or two a week does, add up over the long term. If there's extra special things and features it has on our software, it could be powerful and could, provide value potentially. I know there are retail software platforms out there that we pay for as, I do some property investment. and I pay for some property software as well. So there's a potential there. Househack, number 3 things it will do is buy under market, below market deals, I guess, using this AI wedge finder software thing. 2, fix them up, and 3, rent them out. So there's nothing particularly new here. It's just I guess he's saying that you know, this software as a service, or this bespoke software that he's created, is going to make it easier for him to find the deals. In the future, plan to expand the development of industry software. He's already mentioned that. So it's got AI, augmented reality. That's kind of cool. These aren't particularly difficult things to do, actually, but you know, it does require effort and energy, and you know, software skills and a bit of money to create software, of course. Tenant scoring, artificial intelligence, short, long, and fixed term rental platform and manager. Do you think that's a good idea? It's all in the execution, but this deck looks pretty good. Market opportunity. So it's got some big companies. It's saying Starwood, Waypoint filed eviction notices on more than 30% of tenants, while Invitation Homes filed notices on 15%, according to Reuters. So these are big market cap companies. 5-stage model. Purchase properties, outfit them with the Meet Kevin uniform, which is probably what every investor does, you know, making it good, making it look good, doing it up, I guess. 3, rent out properties for long-term revenue, and they're going to have some kind of short-term rental, fixed flex-term rental on a subscription model, or long lease. I think that's interesting. 4, turn over some of the properties when possible, leveraging some tax advantages of 1031 exchanges, which I think that's an American way you can get some tax relief. May compete with roof stock by selling equity tranches of the portfolio to registered investment advisors, pension funds of the public. That's kind of interesting as well. Registered investment advisor with 2 billion of assets under management, 400 million annual inflows. Has privately expressed potential interest in investing in tranches of the portfolio even before they've started, which is interesting. You know, obviously showing interest is different from doing it, but if they can show traction, I'm sure, I'm pretty sure that pension funds and asset managers would be interested in this model. You find pension funds and asset managers wanting to invest in BlackRock and similar REITs and other real estate kind of investment model, so it wouldn't be surprising that you'd get someone big. The 5th thing is reinvesting cash flow into acquiring more real estate. So it's just a cycle, really. Software as a service upside, they're talking about high valuations here. Why are you identifying profitable deals, working with lenders, blah, blah, blah. So reducing headache, talking about it being, you know, an armchair investment. Basically suggesting it's too difficult to do it as an individual. It is difficult. You know, I do this myself, obviously a smaller scale, and it does take time, and it does take money, and it does take skill and expertise, and it isn't something everybody can do. Highly investor benefited valuation structure, no traditional dilution at raise. He's not taking a salary, 1-for-1. So he's going to invest 5%. It looks like something like that. Is it 5%? He's committed 5 million, and he's basically going to be investing depending on how much investment interest he receives. So if he gets 35 million investor investment, then he'll invest 5 mil. If he gets 50, he'll invest 6.9 mil. If there's 75 mil of cash, he'll invest 9 mil, etc., etc. With a max, it looks like, of 20 million. There's a word of intends here to personally investing alongside. It doesn't say he will. Intended, so there's a pinch of salt there, but looks like he has got the conviction and probably has the money because he's a big YouTuber and whatnot. So I probably wouldn't read too much into this. I'd suggest that he'd probably do this. Yeah, better model, path to revenue, less competitive, higher margins, 2 million community bonus. It's got this building. It's easier to build connections, I guess. Yeah, finding tenants, I imagine, would be really quite easy with his following. Future equity potential. May be able to offer stock in Househack to tenants or agents. It's interesting. The 1031 tax deferred thing that you mentioned is a tax advantage. Main reasons to invest, hands off. That's the armchair thing. Growth potential because it's early to invest and there's no dilution. There may be some dilution, obviously, but you have to read into the details, which is not the case for this video. Investors with benefits, blah, blah, blah. There'll be private events and experiences with Kevin Pathrath. I think that's Meet Kevin. I don't know if I've pronounced his name right here. Someone correct me in the comments if you know they know how to express his name. They've got the Househack rolling a ball, and everyone else is kind of trying to push a square, saying that it's kind of easier to invest. Okay, some repetition here. So you have to be an accredited investor. So this is quite interesting. You can buy shares at $1 a share. The price of the share means nothing, by the way. It's going to be based on how much people invest. That's what he said. If people invest 50 million, that's what the shares valuation is going to be. He's saying it's his biggest and boldest venture yet. This is the legacy that he'll be leaving for his children and his children's children. He wants his community to benefit from this new chapter by being an investor. Frequently asked questions. I'm not based in the USA. Can I still invest? Basically saying it depends on the country. And he's saying if investors from a collective and want to invest a larger amount, he's going to prioritize anyone that has a larger fund. There's an email that you can communicate with his investor relations department, ir@househack.com. How do I know if I'm an accredited investor? You have to have an annual income greater than 200K. By the way, like if most of the currencies in the world are falling against the dollar, so the pound is, I think, at the lowest it's ever been against the dollar, or certainly for decades and decades and decades. So previously, anyone that might have been earning £100,000 might have qualified for this, or 150. But now you need to really earn about £200,000. So not many people will fill into this. I wouldn't fit into it. My boss wouldn't fit into it. Maybe my boss's boss at Meta, where I work, might fit into this. Certainly, well, actually, they're based in the US and California, so they're probably earning more than 200K. Joint household income greater than 300K. Again, in the UK, there's not that many households that earn £280,000 a year. I asked this at a recent pie I went to. I didn't ask this specific question, but I was quite surprised when I was talking to people about buying property, and we were talking about multiples on mortgages, saying, I just used a baseline figure of 100K. Most households, I said the statement that most households will earn £100,000 a year. And the comment from the people I was with was that a lot of households didn't earn a combined £100,000 a year. So in the US here, the accredited investor is asking for a joint household income of $300,000. Probably software developers working for companies like mine, like for WhatsApp and Meta or Google, they will earn that kind of money. But can't imagine that many people will be earning. Certainly in the UK, there's not many people that be earning over 280,000 a year. Maybe some bankers, some doctors, maybe some lawyers, partners at law firms, that kind of thing. But it's going to be a lot less than 1%. I think it'd be more like 0.1%. Net worth of $1 million, individual or jointly with a spouse, after debt and excluding primary residence. So I think that, again, is a different demographic. It's those people that are earning £300,000, £400,000, £500,000 a year, or upwards. They may fall into that possibly. There's people that have benefited from asset inflation. So if people bought a house like 20 years ago in London, even in kind of my area or the area that I used to live in, East London, you could have bought a house in Hackney for like £200,000 that might be worth $1 million now, and you have a huge proportion of that would be equity. But not many people would fall into this category, specifically people that are bought since about 2014. So the last 8 years at the time of recording this video, then not that many people are going to have $1 million in equity. And again, the currency thing here is going to play a big part, because $1 million now is nearly £1 million. So £1 million clear of debt. There's just not that many people in the UK that would have that. I think the vast majority of those people are going to be people over the age of 50. I'd say a lot of 60, 70, 80-year-olds in London, the Southeast, maybe some of the big cities. Oxford, Cambridge, maybe some people on the coast, possibly. Or they hold a valid license. Not really sure what those licenses are. I would imagine they're investment licenses. So this actually, I wouldn't qualify for this round, which is quite surprising because I've invested in about 80 startups in Europe and the UK, and I do actually qualify as an accredited investor in London and the United Kingdom. And that is just because I own so many angel investments and things like that. They see me as knowledgeable enough, and I own my own equities. I pick my own equities, etc. They see me as an accredited investor. But according to this, I won't be available. And but he is saying that earlier on in the deck that people might open it up to unaccredited investors later on. We'll probably get the worst valuation if this company does well. It might be at Series A, where the valuation may have 10x or something like that. Who knows? Can I invest using a traditional IRA or Roth IRA, which is similar to a SIP in the UK? It's a pension account. You need to check with your custodian. You may need a copy of a PPM. As long as you're accredited, again, you should be able to. If you're investing using a Roth IRA, you could potentially grow the value of your Househack equity tax-free. Yeah, that's the same as if you had a valuable SIP, self-investment pension account, I think, in the UK, personal pension. What do I receive after investing? You get some stock certificate. When will it close? The opportunity to invest will not be open-ended. We'll be taking on an unlimited amount of investment. We'll only take on funds we believe we can deploy for returns within a reasonable amount of time. Therefore, the fundraising period may end soon without notice. Will there be another opportunity to invest? We're not sure. The next time you can invest might be the event we have an IPO. By the way, a lot of startups say this because they want to solicit investment early on. It kind of makes sense. They need to get the money now. And it might be true in some cases. Companies don't raise many rounds of investment, especially if they have a big round at the beginning. And if Meet Kevin raises $100 million in round one, doesn't really need to go to the market for more money for like a year or two, maybe more, because you can do a lot with $100 million in a falling property or real estate market in the United States right now. But obviously, if he only raises 5 million, then he might need to go back, possibly. So how does this compare to doing it yourself? Well, you can't really diversify doing it yourself. This is very true because especially in the UK, you need to put down 25%. Even if you had $1 million, you're not going to get that, or £1 million. You're not going to get that many houses for $1 million right now. Certainly if you're investing in London or the Southeast. Obviously, if you're investing in the north of England or cheaper areas in America, you can diversify a little bit. But with 10, 20K, you're not going to get any diversification. There are going to be fees involved. In the UK, there's stamp duty and transaction fees, which can be significant. The growth potential, I think there is growth potential if you do things yourself. It isn't hands-off. You have to get involved in some way. Investor-aligned incentives, yes, because you're doing it yourself. REITs, I think there is diversification with REITs, to be honest, because a lot of those investment trusts do invest across, some of the larger ones have a lot of, they have a lot of property. So I don't agree with that one. No fees. There are some fees with that. There is growth potential. It is hands off. So I think that's probably a more closer alignment to actually Househack. Anyway, syndications, it kind of depends how big the syndication is, but yeah, you have limited diversification. There might be some fees, especially if there's a lead investor, etc. Growth potential, again, there might be some growth potential if you've got good people leading the syndicate. And it is hands off, and the investor should be aligned with the lead investor or the lead syndicate member because they should be investing alongside you. So again, I think that's kind of similar. But for Househack, I think it is better than these three options if it works. Obviously, that's a decision that you'll have to answer yourself. But there will be diversification, no fees, growth potential, hands off, and there is investor aligned incentives. Let's just have a look at what the other things we've got here. So this is the subscription agreement. I'm going to go through it kind of quickly. You can read all this, or you can go back and pause the screen to read it if you want. $1 a share. You need a PPM or something to get. So that you need to acknowledge that you've read this information basically and some other information as well. So it said that it was uncapped, but the maximum offer is actually 200 million, so it's not uncapped. But anyway, providing that subscriptions are at least 25 million, they will elect to close at any time. So he said that he could close at any time, but he needs to raise 25 million. That's this contract. In the event of rejection of the subscription in its entirety, or in the event of the sale of the subscription is not consummated for any reason, this agreement shall have no force. So you can basically probably cancel this at any time. I'm not a legal expert, I'm not a lawyer, and I'm not a financial advisor, but I do like to look at things fairly logically, and I think the law can be looked at logically. It's built on fairness in some cases, or supposed to be. Anyway, purchase procedure payment, you need to pay simultaneously with the execution of the agreement. You deliver the blah, blah, blah. You have to do it in the right way, sending funds to the right payable to this person, Mission Bank. It's bank directed funds. Again, they mentioned this 25 million of minimum funding. Blah, 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 blah. So you have to have knowledge, to have a particular knowledge of the facts of the company's current officers. This is a little bit legalistic. I'm not really sure about these warrants. The company represents and warrants to Sky that the following representations and warranties are true and complete in all material respects as the date. Yeah, this is a bit legalistic and quite hard to understand this bit. It's quite circular. If anyone's a lawyer and is reading this, let me know what you guys think. Sounds like it's about the knowledge of these warrants and representations of warrants. This is the kind of thing he was mentioning, that there's no options and that everyone's investing one for one. So if I were able to invest in this, I would dive a lot deeper into the warranties and things like that, just for my own due diligence. Organization standings, corporation, it's in good standing in the state of Wyoming. Again, if I was investing a huge, a large amount, I'd probably want to research the laws of the incorporation of the state of Wyoming. Why isn't it being incorporated in California? I guess because of tax reasons, possibly, but I want to understand that if I were, investing this. It's qualified companies authorized to do business as a foreign corporation jurisdictions. The securities which, when so issued, sold and delivered against payment, are in accordance with the subscription agreement. She's getting a little bit technical, so I'm not gonna. I think the main thing is about this warranties. That's what I'd want to know about. Again, it seems to be a little bit opaque. If you want to look through this, what else we got? Yeah, you need to be an accredited investor. I'm not. The falling pound has hurt everyone who wants to invest as an accredited investor in the UK, unless you're a banker or a lawyer or just so happen to be a millionaire. Five days after. You have to provide some information, it looks like. Saying that subscribers should have had opportunities to speak to management. So if you do want to invest in this company, I suggest that you send an email to the Investor Relations Department or ask direct questions. There's no fees. So if you're a foreign investor, then you need to read through this. Legal requirements within your own jurisdiction, foreign exchange risk. We talked about the currencies, etc. any governmental consents that need to be obtained, the income tax and other tax consequences, etc., etc. Okay, I'm not going to read all of this. That's basically most of it anyway. But if I were to look at this, I would read it in much more depth. What else we got? This is for accredited investment. It's the same document. I think it's a similar document, to be honest. This is like this is a memo for accredited investors. This is actually quite useful to go through. I'm not going to go through it in like insane detail. Just going to try and pick out anything that jumps out at me. Private placement memorandum. This is the PPM. Yeah, you need to look at the tax aspects, obviously, for your own situation. Speak to your financial advisor, etc. Not a financial advisor. This is just my opinion. So you have the opportunity to ask questions. I think you should do that. It's saying requests for additional information can be done here, ir@househack.com, or there's a phone number here, and there's a street address as well in California. It's incorporated in Wyoming, as I mentioned. I think it'd be good if they explained why that is. It's probably based on tax, I imagine, up to 200 million, but the minimum is 25 million. It's $1 per share. Minimum investment, there you go. This is important. 25K is your minimum investment. This is not for everybody. As I mentioned, currencies have fallen drastically. So 25K for a UK investor, 5 years ago would have been a lot less, maybe 12 or 15 or 17, but now it's pretty much like for like. So you need 25K to get going with this. No public markets, you can't sell the shares or anything like that. Not at the moment, anyway. Okay, I'm going to stop going through these documents because, I've come to my own summary that you have to be an accredited investor. You need at least 25K. You need at least 300,000 joint salary or at least $200K salary just for yourself, or £1 million of net assets, which doesn't include any debt, which is not my category. Plus, it's quite a big amount. 25K. I want to talk about the idea first, though. I think the idea is good. I would do this if I were in his shoes. I do this. I'm kind of micro scale myself with buying and doing up properties and doing a mix of rentals, whether it's short term, service accommodation, mortgage rentals on Airbnb and platforms like that, or if it's multi-home rentals and things like that. Doing it with cash and cash on cash is better. You get a higher return, there's less restrictions, it's open. I understand about capitalizing on this market. If I were in a position where I had millions of dollars, I probably would consider, just my opinion, but I would consider putting 25 into this because he does have a big following. He does have experience in real estate. He looks to me like a very hardworking man. And he obviously looks like he has good intentions for this, that he wants it to do well. I've seen his other videos and I've heard his thoughts on BlackRock, and I think he doesn't like kind of big corporate companies, but I think deep down he wants to, maybe not even deep down, but I think he wants to compete with these guys, and that can drive people to do well. Whatever the motivation is, having strong motivation does often lead to good results. And the fact that he's got experience, flipping properties and doing this over a number of years, that's good as well. Because it's not, because it's 25K and I don't personally qualify, I'm not going to be able to invest in this. Even if I had 25K, if I only had 25K, I probably wouldn't invest in this, just because I have quite strong belief in some of my other stocks and companies. If I had 250 or 500, I probably would consider it, but I don't. So anyway, if you're interested in learning more about angel investing, luckily the stocks that I cover typically have minimum investments of between $10 up to about $1,000. That's the kind of level which I can afford myself at the time of filming. So I think that's a bit more attainable for most of my viewers and subscribers. So most of the videos I make are not going to be at this ticket level. Nevertheless, I do like to cover interesting companies, and I do think there's some value in covering this company, and I will be following it. If they open it up to non-accredited investors at a smaller ticket price, and if it's minimum $500 or $1,000, then I might consider it. Yeah, because I do think it's kind of interesting. Check out my other videos. There'll be some videos at some point that will be recommended for you. There are ways in the description to support this channel if you like what I do. As a reiteration, I'm not a financial advisor, but I have been investing in stocks and property for many, many years. I started investing in stocks in 2007, not a great year to start, but anyway. And I started investing in property in 2016. I now own 3 properties in the UK, one in London, a house in London, a flat in Hertfordshire, a very nice part of the UK, and a house in the Midlands. And I can talk about that in other videos. But yeah, if you like this video, make sure to smash the like button and consider subscribing. If you know someone that might be interested in diversifying their portfolio or doesn't want to get burnt out by the burning of inflation, which is happening at the moment with high inflation around the world, then maybe you might consider sharing this video with your group. I do notice in YouTube analytics that my videos do tend to get shared in Slack groups or on WhatsApp groups or Discord chats, etc. Feel free to consider sharing this with friends, family, colleagues, etc. Guys, remember that knowledge is power, especially that kind of knowledge, and progress is everything. I'll see you guys in the next upcoming video. Take care.